All right, guys and gals, back to the action here once again. Time to get back to work tonight. Monday evening, March the 23rd, 2020. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to find the best levels of support and resistance for tomorrow, the best entry setups I'm watching for tomorrow, and most importantly, my job tonight is to keep us out of trouble by avoiding all those common traps waiting for us tomorrow, and that's Tuesday's trading session. And I have a jam-packed video in store for you guys and gals tonight. We got the charts all ready to go in the background, got some oil, some S&P, and some gold on the video for tonight. I got the calendar all ready as well. We got a big stimulus bill coming tomorrow. I want to make sure you guys know what to be looking for in that. We've also got some big news on tomorrow's calendar, and I want to make sure you guys know the outline for the rest of the week. So it's great to be back here with you guys. I apologize leaving you hanging last week. Last week, quadruple witching, or if you were in my case here, quarantine week last week here in Los Angeles. Don't get us started, right? Don't get us started. We'll focus on the charts here tonight, but it's great to be back here with you guys and gals after a break for quad witching last week. Don't forget, if you're here for the first time today though, make sure you subscribe to our YouTube channel. That way you never miss another great video on our channel. If you have any questions on the video tonight, drop those questions in the comment section below. And as always, if you tune in every evening, hit that thumbs up button for me to show your love for our nightly newsletter every evening on this video newsletter. Let's jump right into this video tonight though. I don't want to waste any more of your valuable time. I got the charts all ready to go. Before we jump into charts though, I want to make sure we grab the calendar for tomorrow. Let's grab a look at the economic news calendar here for tomorrow. Take a look at what's happening on the schedule here for tomorrow. Tomorrow, of course, is a Tuesday, the 24th day of the month. Now, we got some big news tomorrow, as you can see. We got some PMI numbers at 9:45. We got some home sales numbers at 10 o'clock Eastern time. But, I mean, let's be honest here right now. There's only one big news event that everyone's waiting on right now, and that is a $3 trillion, yes, T for trillion, U.S. stimulus bill. This started circulating late last night. That's what caused the S&P, of course, to rally in the overnight. But as you can see, they've stalled. And we've heard delay. And we're talking now, it may not be until Friday that we actually get that stimulus bill signed on the desk of the U.S. President Trump. And of course, right, supposedly putting checks in individuals' pockets here in the U.S. I never thought I would live long enough to see that day here in the United States. Something we don't normally see very often here in the U.S., but that is what they're definitely floating around right now on Capitol Hill. So we do have some big news for tomorrow. We got the PMI number, the new home sales number tomorrow. Those are big news reports. The PMI number tomorrow, you definitely want to be watching markets like gold and oil around 9:45. And of course, new home sales, right? Usually the S&P is a great market to be trading around that new home sales number tomorrow. And obviously, we'll be there in our trade room. We get together every morning, 8 o'clock Eastern time. We're going to trade the plan together this morning. So we'll definitely have a front row seat for those two big news events for tomorrow. But obviously, again, everyone's going to be watching and listening in throughout the rest of the evening. Will they get this $3 trillion U.S. stimulus bill? Will they get it passed today? Will it get pushed down the road tomorrow, Wednesday? If it gets passed overnight, then we're going to probably see a very, very big change in these markets going into next week. So be aware of that as we go into tomorrow's trading session. Unfortunately, all the work I do getting these charts prepped up tonight, they may get wiped out here tomorrow if this stimulus bill gets passed overnight. So that is a big known unknown we have in these markets for tomorrow, that $3 trillion U.S. stimulus package. Will it get passed tonight? If it does, tomorrow is definitely going to be a red hot market tomorrow. If they don't pass that bill tonight, we may see some more of this chop and slop out of the E-minis that we saw today. So I think a lot of these markets are really going to be walking on eggshells at least overnight until we get to tomorrow. until we start getting some more updates right off the White House, off Capitol Hill here in the United States here overnight. So I will definitely be watching and tuning into the headlines overnight. I'll make sure to update all of our clients tomorrow morning in the trade room. And don't forget, every morning, 8 a.m. Eastern time, we get together and we trade together every morning. If you want to get registered and join us tomorrow morning as a client and do it with me, I'll put all the links to get registered in the description of the YouTube video. Or if you're on the blog right now at Sideways Markets, I'll put a big blue button right below the video tonight to get registered and come out and join me tomorrow morning. Speaking of tomorrow morning, again, we get that 9:45 and that 10 o'clock Eastern. Speaking of tomorrow morning, let's get some charts already. Now, again, I don't want to say I'm wasting my time right now, but this could be, we might get these markets really shaken up overnight if that stimulus package is approved. If it doesn't get approved, that may lead to some very disappointing markets. Gold may rally, S&P, of course, may continue grinding lower, and the oil, of course, everyone's waiting on this stimulus package here in the overnight. I got some oil, I got some S&P, and I got some gold here on the charts tonight. Why don't we start first with the black gold, the Texas T, the crude oil futures. What do we know about oil right now? We know that oil, of course, started off the day inside a range. There was a bull bias into a trading range. Now, what does a range tell me? Ranges tell me to buy low underneath the range. They tell me to sell high, and they tell me to avoid the middle. That's the basic idea of a trading range. Range-bound market says I want to buy underneath the range, I want to sell above the range, and I want to avoid the middle of that range. My favorite patterns, my favorite setups in a range environment is to look for failures. In other words, I look for the market to make a run lower underneath the range, and I simply look for sellers to fail as they try to go lower, right? You'll see failures here, see failures here. You'll constantly see failures underneath, again, right? The key is underneath that trading range. So that is definitely something we're watching here, right, for tomorrow, down around that $22 a barrel area. I'll tell you, isn't it still strange to say $22 a barrel? I mean, come on, guys. I went on break for a week last week. I come back and look what happened to these markets. I'll tell you, when I first started trading almost 15 years ago, oil was near $120, $100 cheaper, right? Almost 15 years later. It's almost surreal to see such a small number here on crude oil. But you know what? I keep telling my clients, I'll tell you the same thing. Nothing changes really, during these, different price, who cares? It's the same stuff that we always see. The human being inside of me, there's a lot of emotions going on right now. I'm sure you're dealing with the same thing, right? There's a lot of emotions involved as a human being, but as a trader, my job is pretty much the same thing, define the day type, find my levels, and find my my entry setups. The day type right now is a range here on the oil. We do know we have a bull market here right now, which is a really important clue in this, because I can be a buyer relatively aggressively, right? Buying underneath the range, but I'm going to have to use a slightly more conservative failure pattern. I call these nested failures to sell up around these highs. Now, I'm also watching for a breakout because I got a really good idea, right? A really good kind of vision on a runaway here up to that 26. So I do have some levels I'm watching for, right, up as we go higher at 26. And I'd be lying to you right now if I said it had my eyes on that $20 a barrel, right? That's a really juicy round number there, isn't it? I mean, we've talked about, $50 a barrel, $75 a barrel, $25 a barrel, right? A little bit above us here right now. But man, oh man, that is a really juicy number there, that $20 a barrel area. Now, remember, we heard from Russia only a few weeks ago, I think it was 2 weeks ago, and they said, we're fine at $20 a barrel. I think they said $22 a barrel, right? And that's pretty much where we are right now. So we definitely know we're bullish here in the short term. I got some really great great levels to work with here for tomorrow. What if we go up? What if we go down, right? What if we go sideways here? I think the most important thing right now is, how do I sell this market? You know, we're above the range right now. How do I sell going back down into the range? We're bullish on this, so my preferred sell on this would be what I call a nested failure. And a nested failure pattern, what you want to imagine on this is imagine now the buyer's trying to buy it once, trying to buy it twice, and then selling back down into that range. The key is going to be when you're trying to sell high in a range, but there's a bullish bias to this, you just want to make sure you absorb the market's momentum. So as we go higher, one try, two try, and then we'll sell back down in. I call this a nested failure pattern. Now, if we do get this market back down into that trading range, I don't want to do anything inside the range, but if I can get underneath the range now look for is a straight up two try failure pattern. And it makes sense. You know, I'll wait for the market to run lower. I'll wait for these sellers to sell off the moving average. You can see an example right here, right? They make a strong run lower. The bears try to get short, and what happens? They fail, and buyers are waiting to buy right up into those stop losses. The same thing goes right here, right? So kind of anticipate now. That's a lot of what we're doing here tonight. We're anticipating where these setups may be for tomorrow. That way, I don't have to think so much tomorrow. I can just reference my plan of attack. So I'm watching for a two-try failure pattern down underneath that trading range to be a buyer. So nested failures to be a seller, two-try failures to be a buyer off of those lows. And again, I want to stay away from the middle of this trading range. Now, what if we run higher here? How could I anticipate, or how could I trade this as a breakout? One very difficult thing is we don't really want to buy up here. You'll notice we're right around that gap, right? That was last Friday's close. We, of course, were right at the end of that exhausting week last week. Wasn't that an exhausting week? I mean, I was on break last week, but I was here working on new course videos, right, for our clients at School of Trade. And I'll tell you what an exhausting week it was, right? Mentally, technically. So by the end of that week, they kind of collapsed, right, around 24. Then we're right back around that area. This is going to be a tricky area. You want to wait for a setup on this. What if we go higher here? As we go higher, I definitely don't mind. If we see a strong jump here overnight, a two-try trap pattern. One of my favorite types of breakout patterns, what I call a two-try trap. It's a relatively simple pattern. I'm not a big fan of breakouts overall. I don't like to try to predict the breakout. I like to wait for breakouts, wait for one, wait for two, look for that trap. I call this a two-try trap pattern. I also like to look for these 1, 2, 3 breakout patterns. They pull back off the moving average, right? Find that high, mark off that low. That will create that hidden channel, and I can buy off the low of that hidden channel. Those are two breakout patterns that I'm watching for to get up to, right, that target zone I mentioned, up around that 26 even area. You know, we may also simply run and then go sideways up here. You know, a lot of news headlines we're anticipating overnight. If we do make a jump higher and go sideways, just focus on buying with that two-try failure pattern, right? Just like we talked about, buying underneath the range that we're in right now. If we see a new range develop here in the next couple hours up above this range, we'll know to focus on being a buyer underneath that low. How do we go lower here, though? How could we possibly get short as we go lower? It's not going to be easy, right? We'll look for, of course, that nested failure to sell off the high. But I'll tell you, unless we get a real strong move, unless we see a very strong move down, a 1, 2, 3 breakdown, I could definitely look for a sell off the top of a hidden channel. I would definitely want to make sure I do that before I get back to these major lows, just so we're not selling off the bounce off of those lows, or if it really takes a nosedive and tumbles lower here, I can look for that same type of breakout pattern, right? That two-try trap pattern that I mentioned, right, as we go, right? Imagine now that moving average coming over. Usually there'll be like a little tiny hidden channel in there, right? You can sell off the top of that hidden channel. So as you can see, there's a lot of different possibilities here on oil. I got some failure patterns, some breakout patterns, and of course, right, we're trying to avoid the middle here tomorrow. Speaking of those patterns I keep talking about, again, we'll be trading this stuff together tomorrow morning. If you're not going to be with me tomorrow morning in my trade room, the next best thing is I'll put a link in the upper right-hand corner here for you for our free trading course. This free course, don't let the name free, right, fool you. It is a jam-packed video course. My job in the free course, that little button will pop up there, is I want to give you a runway to get started with me as a new client in our trade room. I go over all of my favorite strategies, my favorite entry setups, and hundreds of examples of how we apply those setups on our favorite futures markets. So grab that link that popped up in the upper right-hand corner, get registered for tomorrow, or get registered as a member of our free courses. That way you can learn the strategy, learn the setups. At the very least, you can participate with me every evening on this video newsletter. And again, don't forget, I'll put all the links to come join me tomorrow in the trade room down in the description of this YouTube video, or if you're on the blog at Sideways Markets, I'll put it right below the video tonight on the trading blog. Any questions about this, drop those questions in the comment section below. And don't forget, if it feels great to be back here, it feels great to be back here with you. Hit that thumbs up button for me if you're as excited as I am to be back in the action here tonight as well. Let's keep going here. Got some oil. How about we jump over here now to the S&P here now. The S&P, I would say the S&P is probably going to be the one we really got to be careful with as we go into the overnight session. We talked about earlier, we've got that $3 trillion stimulus bill that's trying to make its way through the House here in the U.S. We've got various countries throughout the EU pushing for their own stimulus bills. So we know this market in particular, which has lost over 1,000 points in the last few weeks, right? We were just at 3,200, and we might see 2,000 if we don't get this bill passed here soon. But we know that everyone is kind of walking on eggshells right now on this S&P because of this stimulus bill. So a lot of this tonight is going to be kind of getting ready for what might come out of this, but I want to really kind of caution you as we go into tomorrow's trading session. Please be aware, we may have to redo all of this prep work tomorrow morning at the opening bell, because overnight we may see quite a bit of volatility here as we keep getting more headlines. So be aware of that. And again, I'll walk you through this all together tomorrow morning at the opening bell at 8 o'clock Eastern time in our trade room. What do we know about the S&P right now, besides the fact this is a messy chart? The world's waiting on the stimulus bill, and the S&P is probably waiting right along with it. What else do we know about this? We know we had a big gap, right? That Friday close, that messy week last week, they open up gapping down, but this is where we started to hear that rumor about that $3 trillion bill. I think it was Kudlow. He was making his rounds last night. I don't watch much television, but of course I'm tuning in like everybody else right now, trying to get as much as I can that's happening out there. And so we start hearing this rumor about this about this stimulus bill, and the market rallies higher. Well, then we hear later on that it's hit some snags, right? The House isn't exactly on board with the Senate, and the market sinks back down. What is very interesting, though, you'll notice is they never came back to retest the low. So you can definitely see there's that little bit of hope out there in these markets right now. It might not be, the flame might not be that strong on that hope, but you can definitely see there is quite a bit of optimism still that we're going to get this stimulus bill done. I think this is one of the first times in the U.S. in the last couple of years you're going to find both sides of the aisle pretty incentivized to get this stuff done. Everyone is kind of waiting on them right now. So we know we had a lot of emotions, right? And look what happened, right? We gap down, we slam higher, we slam back up, and And look what they kept coming back to. They kept coming back to this gap area at 22.66.5. You're going to want to make sure you keep an eye on that level probably for the rest of the week here, unless we get that stimulus package and the market, I would imagine, a $3 trillion spending package with literally direct deposit checks into, I mean, for what they're telling me, everyone's bank account right now. So, I can't imagine the market goes lower on that, but you know what that means? It probably will dump lower and then rally right as we see more developments on it. But I would imagine, though, this gap will continue to be a magnet throughout the rest of the week. Honestly, keep that 66.5 level on your charts this week, unless we completely blow this area out of the water, right? Unless we completely launch or collapse off this area, I would imagine that 66.5 area will continue to be a very important sticky price magnet for us. You can see we go up, we go down, we come back into the magnet. We go down, come back in. I would imagine we're going to keep going back up into this range here on the chart. So ultimately, you could definitely say this is a range. I would say there's overall a bear bias, right? Oil, of course, had a bull bias. I would call this a bear bias into a trading range. Now, what does a range tell us to do? It tells me to buy low. It tells me to sell high. A range is a balanced market, right? Balanced markets say buy low, sell high, fade the breakouts, and avoid the middle. So just like on crude oil, I'm looking for failure patterns up around my sell zone. You'll notice I have this block of red overhead. That's my sell zone above, my block of green below, right? Got my buy zone down below. That's where I'm looking to be a buyer. That's where I'm looking to be a seller. I know to stay out of the middle here. We're looking for failure patterns in range-bound markets, basically failures and breakout patterns, right, in range-bound markets. The failure patterns I want to look for as we go higher, right, above the range, I look for what I call a two-try failure pattern. It's a pretty simple idea. You wait for the market to go higher. You wait for those buyers to buy the breakout pullback, and we sell into their stop losses, right? Or as we go lower, what's the best way to sell underneath a range? Well, remember, we're bearish now. So for me to be a buyer here, I would want to look for, what was it called again? It was called a nested failure. Remember that from earlier on? A nested failure. And again, this is very similar to a two-try failure. You could almost call this a three-try failure, right? You've got the move lower, the one off the moving average, another one, right? And again, what you're trying to do is you're trying to rope in these sellers, right? We're trying to be a buyer, but it's not a bull market. If it was a bull market, I'd be a lot more aggressive being a buyer, right? But the problem is, though, when I see a market make a run going lower in a bear move like this, in my experience, the best thing to do is wait to try once, wait to try twice, and then buy once those two tries are over. In fact, in our trade room tomorrow, we'll look for ways to buy right into those stop losses. So same thing will go down here, right? I want to buy low, sell high. And really, it all depends on the momentum of the market. So as we go lower here, right, I am definitely not interested in selling down here. We're at a major low. We've got a pendulum swing, a measured move support level down here. These are all very, very difficult to justify being a seller, right? So how do we buy down here? We've got to look for that nested failure, right? We've got to let the bears try once, let them try twice, and then once I've got those bears with that kind of proverbial rope wrapped around their neck, like we saw back here, 1 and 2. Now I know everybody's already committed for the sell side. There's no, there's no more bears left to come in. Now we know where their stops are, and I can buy right into those stop losses. A nested failure pattern going back up into that trading range. Now, don't forget, if we go back into the range, stay out of that middle. Okay, this is the magnet. We don't want to trade on top of the magnet. We want to get in underneath these ranges and go back to the magnet. Now, a couple things I want to talk about here as we run higher, because there is a possibility we might get that stimulus bill that gets announced here right overnight or early tomorrow. This is where a little bit of experience comes into play. For example, if we take off going higher here, right? If we get another one of these big blast out moves here, I'm not going to be able to use that now as a straight failure, a two-try failure, and sell back into that range. Now, if we do get that strong run, what I'll do is I'll use that nested failure. I don't want to get too complicated here because we're going to go into a lot more detail on this in the course, right? In that free course I mentioned earlier. I'll cover a lot more of these details in the free course, and obviously we'll do it together tomorrow in the trade room. But if we go back into the range and we sit for a while, that will kind of absorb a lot of this momentum. Then I can get that jump up. I can get those buyers coming in, let them try to buy that pullback. Again, it's not a bull market overall, it's a range, right? And I can be a seller into those stop losses. In fact, if I get lucky, I might get a failure into a pullback combination pattern, right? But it's always going to be one of my favorites off that range. The key to this, though, is we have to be able to absorb that momentum back inside the range. This completely changes if we see a very strong move running higher. If we see a real strong move running higher that doesn't even care about that range, now that momentum is way too strong just to sell. They're probably trying to get to that 85, 86 up there, right? So now, if I want to be a seller, I got to resort to that nested failure. So as you can see, it's not as black and white sometimes. Trading is always kind of a shade of gray. There's always a bit of discretion involved on these failure patterns. The fundamentals are the same though. Buy low, sell high, stay out of the middle. If we see a lot of momentum running higher here, one try, two try, then we can sell back down. But again, if they sit right in the middle here for a while, right, we chop up, there's no momentum, right? It jumps up, buyer failure. I'll be looking to short that right back down into that trading range. Now, maybe you're interested in buying this thing, right? Could I buy this? Absolutely. 1, 2, 3, break higher. This is not drawn to scale, right? But look for this pattern as we go higher, buying the low. I call this a 1, 2, 3 reversal or a 1, 2, 3 breakout. Mark the trend line off the highs first, because that's all you'll have to work with. Then bring it down to those lows, and that's going to tell you where that channel is, right? So strong move up. Moving average comes over, they hold the pullback and jump off of it. That jump off the moving average tells me this is a breakout. Mark the high, mark the low, find that hidden channel, and we're buying the low of that hidden channel. Or, right, you might get, sometimes we get this thing to really launch here. Sometimes it really launches. If it really launches, it may not pull back to the moving average. And what happens a lot of times is it'll run up, it'll shallow pull back. And whenever you see the shallow pullback, you know what I mean? It won't pull back to the moving average. When you see a shallow pullback on that, now you know two-try trap pattern, and I can buy underneath that low. This is a very specific trade setup. I call this a two-try trap. We look for these all day, every day in our trade room. But remember, the most important thing is it starts off with a strong move. Usually it's a shallow pullback that doesn't quite scrape the moving average, and that trap low, that is a beautiful entry. Where's my target? Target, of course, is back up to retest those highs. So we are looking for some breakout patterns here as we go. I'm not quite sure about breakouts, the downside here, right? If we do get a breakout running lower, I get a lot of support down here, the low of the day from today. And also, too, remember that pendulum swing, the amount of the move above the range, the amount of the move below the range, that get the measured move down there as well. I worry that this area is really going to be difficult. So what I'd like to do is break through that area on some strength. I have another runaway zone down around, oh my goodness, 2,000. My goodness, 2,000. I don't think they're making hats down at the S&P pits right now with 2,000. Do you think they're doing that? You think the old guys you think the old dogs in the pit are bringing out their old 2,000 or die? Probably not. Maybe they are, right? That'd be a good sense of humor. Probably not going to see too many t-shirts being floating around about 2,000 or bust, right? Probably not. If you have one of those, though, right, I definitely post a picture and tag me in it because that would be a riot. I would love to see some of those t-shirts. Those are some old school t-shirts, right? Those hats and t-shirts they would make up for the traders on the floor with these big milestones. The bottom line is, all kidding aside, though, I could easily see how it go down, right? One try, two try, nested failure, and back up. That is definitely something we're watching for. A lot of times too, these will go 1, 2, 3. It'll be a nested into a pullback, right? So watch out for that failure into pullback, or it's that 1, 2, 3 breakdown. Mark that low, mark that high, and we're selling off the high of that hidden channel. Remember, I can't trust the first pullback, right? You can't trust that first pullback because you're selling right into support. You can trust the second one, right? So what I always tell my clients is stay patient on that first one, but don't stay too patient. Second one, hit that second one hard. That one is usually going to be the one you want to wait for. You can't trust the first one, but once with the second one, hit it, right? Hit it. Target, of course, now down to that 2,000. Or if we don't get the pullback, it just collapses, right? As it runs lower here, shallow pullback, lower low. And of course, looking for those 2 traps. And again, this will usually be just above the moving average. I always like to incorporate some sort of additional level of resistance on it. So keep your eyes open on those setups as we do collapse lower. I would imagine if they tell us their spending bill is not getting approved till Friday or something, we may see something, right, like that big move as we go lower. So we've got all the bases covered, I think, right? We know how to buy it. We know how to sell it. We know that, again, as a human being, my emotions are all over the place because of this whole thing. But as a trader, my job is to come in tomorrow, have a very clear, have a clear, sober mindset. What's my day type? What's my direction? Where are my levels? Where are my setups? Tomorrow morning, we're going to do that all together at 8 o'clock Eastern time. Don't forget, you can find all the links for that, right, for getting registered in the description of this YouTube video. Let's keep moving, though, here tonight on the video. How about some gold? Let's wrap tonight here on the gold. One of my favorite setups here on the gold. I hope we can get a pullback on this yellow metal. I always love it whenever I see a 1, 2, and then 3, that big strong move. This reminds me of those Elliott wave, 5 wave sequences. 1, 2, big impulse, right? Big impulse leg. Number 3, mark up these highs, mark up these lows. I just hope we get that deep pullback for tomorrow. This is a very popular strategy, a very reliable strategy. My only complaint about it is, oftentimes, when you get these big, strong moves, the market won't pull back. It'll go sideways, right, or it'll grind higher here. So we definitely want to be ready for both of those scenarios at this point. So as you can see, we know we're bullish here on the gold. I think gold is probably the easiest of all of these markets right now. Easy with an asterisk next to it because you know with that stimulus package they're voting on here hopefully tonight on Capitol Hill, that may certainly have this market a little bit twitchy here, right? We may see a little more of these spiky, candlesticks as we trade overnight. So be aware, if there's one market here, you've really got to be careful whenever they're talking about stimulus or spending bills. Gold is one of them. We get some big news tomorrow. That PMI number tomorrow morning at 9:45 is a big news report for gold. So hopefully we can get a clear reading on that here tomorrow. We know we're bullish. We know we are right in that runaway zone. Again, I look at this as a 1, 2, 3 breakout. 1, 2, 3. And I say 3 because you got that strength as we go. So I'm marking up those highs. I'm marking up that low. That's going to give me now where I want to be a buyer here, right, on this gold. Again, the biggest problem we have is that strong move here. That strong move going higher tells me we may not get that pullback, right? We may not get that pullback. People may not want to take profit. They definitely probably don't want to sell this into this strong move here. And again, everyone's kind of waiting on this stimulus package. So let's play this game. What if it goes up? What if it goes down? What if it goes sideways? That's kind of the only thing we have to work with here right now. I would, in most of the time, when you see this much strength like this, if we don't get that pullback, we're going to go sideways here. So be aware of that. Let me get that out of the way here for just a moment. If we do end up going sideways, you can almost anticipate where that range will be right now. What I'll do is, once I know more about this range here tonight, I'll be able to take the range, copy and paste it once, right? Copy and paste it twice. Come on here. Don't fail me now, right? Bring it down there. Perfect. And that will become kind of the range buy zone here for tomorrow. Now, obviously, I'm kind of anticipating. I'm making an educated guess right now. But this area is kind of where I would, again, once we know where the range is. Now, we talked about this. What does a range tell me? Ranges are what? They're balanced. There'll be a bull bias to it, so I want to be a buyer rather than being a seller, obviously. Where's the best place to buy in a range environment? Underneath the range. What's the best pattern? The best pattern is wait for the breakout. Don't try to pick the bottom on this. Wait for those bears to come in. Let them try to sell off of it. And that's called what? A two-try failure pattern, right? Now, at the same time here, if we go, right, if we got a range here, if we have a range here, we start going sideways, right, and we want to sell above the high, how do we sell above the high of a range in a bull market? That's right, a nested failure. 1, 2, right? Because we're going against the range direction. Very good work. I'm glad to see you paying attention. Does that make sense out there? Right? Hit the thumbs up button for me if that makes sense. If you're going against momentum, a little more conservative, right? I would even say even half-size position. If you're going with momentum, hit it, right? Once again, underneath it, bear failure, hit it, right? You can go hard on that because everyone's buying into those stop losses. Does that make any sense, right? If it does, hit that thumbs up button. If you have any questions, drop those questions in the comments section below. And again, these failure patterns, we talk about these all over the place, right, in that free trading class. Make sure you grab that free course or come out and trade it with us tomorrow in the trade room. All the links in the description of the YouTube video. Now, we know the plan if we go sideways here. What if we don't? What if we come back, right, and pull back here? I've got two buy zones. I've got buy zone number 1, and I've got buy zone number 2. This is a lot about momentum. Because this channel is so darn wide, right? If I get a shallow pullback, right, I can be a lot more aggressive. But if I see a real deep pullback, yeah, now I'm going to want to be a little more patient. We're going to use those same patterns again, that failure pattern and the nested failure. I'm watching closely this area here around 1540. If I can get a pullback, I really honestly don't need to get all the way down to the low of that channel. Again, I'd love to, but because we have so much momentum here, it's not a guarantee. It's not a guarantee. We don't always get deep pullbacks when you have a real strong, again, I call this the runaway zone for a reason. It's a very strong move higher. So if I can get a pullback down into the first battle zone, get that moving average coming over, I can look for that straight up two-try failure, right, into a pullback combination. Just make sure you find that pullback before we get back up to retest those highs, right? It's a great combination setup with a shallow pullback. However, I've got my eyes on that swing at 19.5. This would really be kind of a gift for the buyers here who weren't able to get in on the move higher here. Now, if they really pull back like this, you've got to be thinking that momentum now. Those bears are not going to give up without a fight here. You're going to want to let them try once, try twice. Yeah, now you can be aggressive. Now you can buy. And almost always, after you see a nested failure pattern like that, you're going to get that real strong jump higher, right? Normally it'll pull back right away, but a lot of times with those deep pullbacks, what will happen is it'll shallow pullback, higher high. You know what I'm talking about, two-try trap pattern, right? So that pattern here now, that'll be a great one to look for as well. So a nested failure into a two-try trap. Again, make sure you grab before you go back up and retest those highs. So keep an eye right on that move as we go lower. A lot of it has to do with context. Again, not a lot is black and white in day trading. A lot of this is going to depend on momentum. This is a very wide channel. If it really pulls back, the momentum will continue to be a factor here. As we go higher here, if we grind higher, what does that look like? A spike in channel. Right? Spike up into a channel. Now remind me, if you're a client of mine, no cheating out there. My clients know this already, but I want to see who actually watches this newsletter. Where is the best buy zone on a spike in channel? I know you know this. You've been tuning in every evening. I know it was gone last week. I know it's a stressful time out there. Where's the best buy zone? The base of that channel. right? So if it does keep grinding higher, and you'll notice, right, it'll keep grinding, no deep pullback, just wait for it, right? Wait for it. It'll eventually the buyers will run out of bullets, as we say. We'll get that pullback. That's where the magic happens, because once the pullback happens, people think the market's reversed. They try to sell into that breakout pullback, right? And that's where the magic is. That's where we can catch those counter trend traders, those top pickers on the wrong side of the market, and we can buy right into those stop losses. Spike and channel patterns. Spike and channels are probably one of the top 5 chart patterns that you've got to learn as a new trader, because they've got so much momentum behind them. It makes them so reliable. You know, the best stuff for a day trader starts with momentum. Strong moves lead to easy setups and usually easy to get profit targets. Now, don't forget, my objective at this point, right, we're waiting for that next pullback, and we're going to calculate that pullback for that measured move. So I don't know exactly where the measured move is going to be right now, but once we get that pullback, depending on where it is, that will now tell us where that measured move is. So I'm calculating off of this big leg higher here. If we get the deep pullback there, that's how I'll draw it. If it goes higher and then pulls back, well, again, we'll draw it up from there. But I think right now, though, you got to have your eyes on that big round number at 1600 and the measured move from there. All right, guys. Boy, I know we covered a lot here tonight on this video. Drop me some questions in the comment section below. Make sure you subscribe to our YouTube channel. And most importantly, make sure you're there with me tomorrow morning at the opening bell. Our advanced membership is what you want. That's the only membership that is a lifetime access to our trade room, all the indicators, all the tools, all the cheat sheets, everything you need to participate with me tomorrow morning at the opening bell. Again, I'll put all the links in the description to get registered as a new member. Do not be afraid to call me in the office tonight, right? I'll be glued to my television set like everybody else right now. Nothing else to do out there. I'm about to start playing video games at night with my wife right now. Nothing else going on, right? We're all stuck in quarantine here in Los Angeles. And of course, again, don't be afraid. Use that live support tool there, right, as well. I'm always here to help you guys out. I joke around. I try to keep it light. You know, again, as a human being, my heart goes out to everyone in Europe and Asia, in the north, and everywhere right now being affected by this. I know this is hitting us at our core right now. As a human being, a warm-blooded husband, right? Not a father yet, right? But a brother, a son, an uncle, a nephew, a coach, right? My heart goes out to everyone being affected by this. Stay strong out there. Stay positive out there. But as a trader, my job is to stay disciplined. My job is to not let the headlines get to me. My job is not to think about what's happening out there. Don't care about the price. Care about the pattern. And tomorrow, we'll do it together here tomorrow and every morning, right, with all our clients in the trade room. Again, as always, if membership is not quite right for you right now, make sure you grab that free course as part of our free trial. Join the trade room tomorrow morning. Hit that thumbs up button for me if you're still here listening with me tonight. And thank you so much for coming back and seeing me tonight. Great to be back here with you guys as always. And as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.